Hello everyone, welcome to Just Invest Today. And today we're talking about 13F Filings, man. And this is a new one. I've never seen it, but man, was I impressed with these companies, man. So today we're gonna talk about Chuck Akre and we're gonna talk about Valley Forge Capital. I think his name is like Dev and his last name is crazy, but anyways, this portfolio is amazing and I want to do like a more deep dive on who this guy is, what is his teachings, because he has a nice portfolio of strong companies and I want to do more research on his returns. But before we get into that, we're going to see like what's their philosophy, what are they doing, right? So Valley Forge Capital Management. We believe that having the proper temperament and discipline are keys to superior investment returns. Practicing patience, remaining unemotional through market swings allows VFCM to take advantage of opportunities when we see others behaving irrationally and fearfully. So this is Graham 101, Warren Buffett 101 right here. Being disciplined, waiting for opportunities in the market to go up and down and just being centered during the whole phase. So they have 2 billion assets under management right now. So let's hear their philosophy. Runs a long base equity strategy which employs a rigorous bottom-up fundamental approach to find high-quality businesses with strong organic growth. That's key. Organic growth, predictable earnings, capital efficiency, prudent management. Guys, remember this when we're looking at their portfolio. Organic growth, predictable earnings, capital efficiency. That is super key. Prudent management. Looks to purchase companies with leading industry positions that can thrive in a variety of economic conditions. This approach reduces the need to market time around macroeconomic factors which are difficult to predict in the short term. This is very true, and this is why it's so important to have moat companies that are leading their industry and that can just do anything in economic conditions, that can just thrive. So let's look at this. So he has the S&P. We're going to skip that. He has MasterCard, man. MasterCard, like, look at this. Like, look what he said. Like, capital efficient, one of the leading positions, right? Predictable earnings. Like, what MasterCard has been doing has just been crazy, man. Let's look at what MasterCard has been doing and what Moody's. Look at this 5-year chart for freaking MasterCard. Can you imagine you bought it in 2016? Bro, like, what? 237%? Like, that's a nice little run up, and that's strong predictability of the company, right? So, MasterCard, Moat, Moody's, Moat, you need this agency to actually get your ratings on your bonds and all that good stuff in the market. So, you just need those Moody ratings. So, it's a strong moat company, capital light, capital efficient. It can run in any economic condition, which is just what they're preaching, and has strong organic growth with predictability. But the thing about MasterCard is, though, there's so many different payment options coming to fruition right now. So, like, that's why I'm kind of hesitant to invest in MasterCard and Visa and all those companies, because the digital wallet and like blockchain and all these things are just coming down the pipeline. Like, Affirm, like, there's so many companies I think they're just coming for like MasterCard and Visa's moat. So I'm weary of that. I'm not sure what this is, Fair Isaac. I'm not sure whether Amazon. This is the only company that I see that's not capital light in their portfolio, but it can still work in any economic conditions, because even in a recession, you're still gonna order cheap, efficient stuff that come quick, right? And even you've seen in the pandemic, it's still generated higher returns in the pandemic. So you can see Amazon does good in any economic condition. It's predictable. We know Amazon's going to continue to grow. It has organic growth. So Visa, Adobe. Adobe, man, I missed out on Adobe so hard. I'm really good. I should make a video on Adobe, but everyone knows about Adobe. If this company, honestly, guys, tell me what stock. Like this video, subscribe to my channel, man. But what company here would you guys invest in if the market turns? If the market crashes tomorrow, what company in this portfolio would you invest in? I think it would be Adobe, man. Because Adobe is capital light, organic growth, works in any economic condition, it has reoccurring revenue because it has all these like colleges, companies that use Adobe. Like, but the only thing about Adobe is someone can like people can come in and think like I don't know like you think their moat can be destroyed for Adobe? Tell me down below. Like Adobe is so solid, but I think it can be destroyed, but it's never been destroyed and it's been going crazy forever. Let's see what Adobe's been doing in the past 5 years. 5 years of Adobe, man. Like look at this, 500%, man. So it's doing better than Mastercard, but that's huge, man. Can you imagine just owning these companies all for 5 years? Like he's hit it out the park. Like he's hit it out the park. What Visa, Adobe, Mastercard, Moody's. He has the S&P. S&P has been gaining like what 14-13%. So that's still really good. Autodesk, like Inuit, like he has amazing companies in his portfolio. This is what my portfolio. This is what I want in my portfolio, guys. I'm not gonna lie. 9 solid stocks that can produce organic growth in any economic condition that is leading in their industry. That's the companies I want, man. So Valley Forge Dev, man, I'm gonna do more due diligence on this guy, what he's doing, his thought process. Like this is the kind of portfolio that you guys want, man. And yeah, man. So next guy is Chuck Akre. So Chuck Akre, man, amazing investor, value investor, and we're gonna go through his Wow, his portfolio all reduce. Even though it's not a lot, it's still reducing, man. Maybe he's getting ready for, maybe he's getting ready for the taxes, man. But he's reduced everything. But even Chuck Akre, like you can see, you gotta remember that these, what Joel Greenblatt said. He's like people usually the strongest position. Those are the companies that you do the bottom up analysis and that they don't have a lot of risk of like losing out on their position or just going under. Those are the positions that you want, the ones that are the less risky, not the ones that are going to go 5-10x. So that's what you see in Chuck Akre's position. Moody's, MasterCard, American Tower, like those companies, Visa, those companies aren't going anywhere. So and if they do go somewhere, it's going to happen slowly. Their moat is going to erode very slowly, so you can actually see it coming, so you can get out perfectly. If it happens, right, you can get out of it. That's what I love about these companies. They're not going to have, like, Peloton one day be amazing and then boom, boom, just fall down like crazy. You're not going to see that with these companies like Visa, Moody's, MasterCard, American Tower. So his portfolio is pretty interesting. His top 4 positions have a good strong weighting, and then he has CarMax, Automotive, O'Reilly Automotive, Adobe 2, CoStar, Salesforce. Salesforce is so interesting, man, because Salesforce has been doing amazing, but I can't get my head around Salesforce. I think it's like a complicated company in my mind. So that's why I just avoided CoStar, Brookfield. Brookfield's an amazing company too. He has strong companies in here, but the ones that stand out to me, Adobe, like I said before, he has Brookfield Asset Management, amazing. And then he has Visa, MasterCard, strong holdings. But yeah, his portfolio is nice and rounded. I feel like he has companies that he thinks they're gonna do really well in the future. So like Dollar Tree, like even Dollar Tree has like a good like advantage of like the dollar market, right? So that's gonna thrive in a lot of economic conditions. He has what? He has SBA Communications. Those are like little bets, but I guarantee you he thinks these little bets are gonna pay off. Like CoStar, like KKR. Yeah, so I think he has these little he has these little bets that I think he knows that are gonna pay off in the future and they're gonna help him compound. But he still has his top holdings that are just gonna maintain and just stay strong through any economic conditions and through the ups and downs. Because remember, he has to maintain that portfolio being pretty steady while gaining market share. So yeah, man. So that's what I see for Chuck Akre, Valley Forge Capital. I'm gonna keep my eye on. They're the new people to look at. The new people on the block. They just listed their 13F filings. So guys, man, please like this video, subscribe to my channel, and get back to you in the next video. Peace.